Welcome to Biz with Rich. I'm Rich, Head of Investments at Under the Radar Report. We're celebrating our 12th anniversary. Yep, we've been around for 12 years, and I'd like to thank my team for such a big effort over 12 years providing quality research, specializing in small caps. It's been quite a journey, a profitable one at that. This week, to celebrate, we delivered a 106 stock research rundown, which for the first time includes a risk rating to help you invest. So basically, a stock is influenced by two factors: sentiment and fundamentals. Sentiment, can often be summed up by the share price, and that provides opportunities, but only when you've done your homework on the fundamentals, which is basically a company's financial strength. So that's what we focus on this week, because what we're doing is helping subscribers appreciate the risk when they go into any different stock, whether it's just to look at it or to buy it. So what you're looking to do is to build a portfolio, and that is the way that you reduce your overall risk. And I guess the point is that portfolio with a number of stocks have stocks with various levels of risk. So in that way, they complement each other, and then you're basically, you're building a portfolio of strength, and that's how you that's how you make money. That's it. It's that simple, if only. So this week we outline the risk factors in our report that go into our risk rating, and there's quite a bit of detail there, so it's worth catching up. But what I thought I'd do is just give you a few examples of how this comes together in a stock analysis. So the first stock I'd like to talk about is Infomedia. They're a car parts catalogue provider. This is unquestionably strong. Basically, this is one of the strongest small caps I've come across. They've got a subscription business model. They've got huge net cash, so their balance sheet's very strong. They have a blue chip client base, of automotive giants like Land Rover. But basically, we have done extremely well out of this stock, because when it was on its knees, or in a stock price sense, that's when we jumped in, because we knew it was a quality company, and we've made 4 or 5 times. Fast forward to today, it is still a quality company, strong financially, but there's what you call price risk, because to justify the current price, not only do you have to be strong, you have to grow your revenues, you have to grow your earnings, and we question its ability to do that. So that's why we take profits. Next stock is also unquestionably strong on the financials front. Pilgrim Minerals. I mean, this stock is producing cash flow like no tomorrow. It's a lithium producer, so it's certainly been one of the first movers in a sector that's nascent but growing quickly. But this stock, unlike the first one, we believe has significant growth going forward. So the big deal with this stock is that although the lithium price has been somewhat off lately, its production profile, which has been funded and is embedded in the company, is set to really go through the roof. So we think that this stock, we like this stock, so we've got it as a spec buy. The third stock is weak financially. There's no other way to put it. Panoramic Resources. It's not as weak as some stocks, because it does produce really strong revenues, or it does produce strong revenues for its size. The thing is, it's making losses as it basically ramps up production at Savannah Mines in Western Australia. So you've got some operating risk there, but basically you've also got a company that has raised money, and there's a question mark over whether it will need to raise money again in the near future. But this is the kind of stock where you would buy if you're a nickel bull, and the nickel price has been has been down recently. So there's a lot more commodities price risk with this one than with the one I just mentioned before. So we actually rate this stock as a hold. So what I'm talking about is separating the company risk from the stock price risk. And everyone has a different tolerance for risk. Every single person that invests has a different tolerance for risk. Everyone has different capabilities and understandings of the world. So everyone has their own competitive strengths, and you need to bring them to bear when you're investing. What our risks ratings help you do is basically to understand the financial risk that's involved when you step in to a stock. So that's a very important guide for investing, which is why we've spent so much time on it. The beer, here we go. It's pretty hot here, so I thought I'd choose one to cool myself down. East Coast Haze. It's a hazy pale ale. It's by Black Hops Brewery. I think they're in Surface Paradise. It's definitely got a cooling effect. Very important on these hot spring days. So cheers. It's great to be back. Look forward to talking to you again soon.